Let's welcome our market master for the day, Sanjeev Prasad, Senior Executive Director and Co-Head at Kotak Institutional Equities. Good morning, Sanjeev. Good to have you with us. Yesterday we saw this rather big fall in the markets compared to the previous weeks. And a lot of people started talking about the government not quite performing and the disconnect between fundamentals, earnings and macro data and stock prices. Do you think for the moment we've seen the high of the year at least or high until the budget?
Well, it depends. If the government is able to push through a lot more reforms in the winter session of Parliament, which just started a couple of days back, then you could still see some momentum in the market. But if the opposition continues to play hardball and we don't see progress on some of the more important piece of legislation, such as opening up of the coal sector for private sector commercial mining, then there could be some disappointment coming in, not only on a more short-term basis and on a sector-specific basis, but people will start wondering on the ability of the government to implement more difficult reforms, such as land reforms, labor policy changes, power sector reforms, which either are of a legislative nature or require the approval of states or the cooperation of states to a large extent. And that's what the worry could be, that if the government is not able to implement some of the reforms over the next, let's say, a few months, people then start questioning the medium-term assumptions which people have built in terms of strong economic recovery and so on and so forth. So there could be some correction based on that fact that the government is not able to implement reforms, even though it is very keen to implement reforms, more because of lack of majority in the upper house of Parliament.
Okay, I was reading your model portfolio changes. You have dropped RIL and you have allocated that weight to HDFC Bank. Now, would you say that the overhang of MSCI is over and now HDFC Bank becomes attractive?
See, we always liked HDFC Bank as a great bank, and it's been a pretty big underperformer over the last 2 years. Of late, it started to outperform, and we thought that the period of underperformance is coming to an end. If I look at the issues which have been plaguing the stock, one is with respect to the foreign ownership limit. Now that the FIPB clearance is on its way, looks like the company can go ahead with its fund issuance if it wants to. And at the end of the day, this is a very high quality bank, trading at maybe, let's say, 3.6, 3.7 times March 16 book. But it's a bank which generates something like 21-22% ROE on a consistent basis. So, this is a bank where I think the valuation will hold up and you would make money on a compounding basis. And every year you could see the book expanding by between 16 to 18%. Based on an ROE of about 22%, you take out some dividends, you could easily see the book growing at about 16-18% every year. So that's the kind of returns you could continue to make in this bank for a pretty long time, I would think.
Sanjeev, hi, morning. I just wanted to flesh out that point you made about the possibility of a correction if the reform momentum does not pick up. What kind of a correction are we staring at in the next 3 to 6 months?
Again, as I said, it depends. As of now, people still seem to be very positive. People are more looking at any correction as a buying opportunity. So as long as we see some reforms going ahead, more through the executive route, even if the government is not able to implement reforms through the legislative route, it can still do a lot of reforms through the policy side or the executive side. So, presumably some of those things will go ahead. For example, GST, even though it's a legislative reform, I don't think there's much opposition to it from political parties on political or ideological grounds. So presumably that will go ahead. Similarly, introduction of direct benefit transfer schemes, it's not a political thing. It will probably go ahead, will reduce the fiscal deficit over a period of time. So you could still see a lot more reforms going ahead, even if some of the more complicated ones may take more time to move ahead. The other thing to keep in mind is the fact that you are not seeing that much of earning support as of now, in the sense valuations are expensive. If you look at the market on a 12-month forward basis for the BSE 30 index is already at more than 17 times now, which is pretty much at the top end of the historical trading band. And we're not seeing the kind of earnings upgrades which the market had assumed earlier. In fact, for 2015, we had to cut our earning numbers after the second quarter 2015 result season. So as of now, I think you could see some disappointment, not only from reform side, but also in terms of earning numbers. Probably a volume slowdown, which people have started to talk about once again in some of the consumer discretionary sectors. After the festive season, automobile demand is not looking that good. So that follow-up, buying, economic recovery, investment cycle, that is not what is kicking in us up now. And I think that's where the government needs to focus all its attention on how to kickstart the investment cycle going forward.
Okay. Just to get a couple of more of your model portfolio changes, you have made some changes as far as your FMCG and pharma stocks are concerned. So it's interesting, you've removed Colgate from your portfolio and distributed it to names like Cipla and Marico. Just take us through what you expect from these two pockets, say in the next 6 to 12 months.
Again, these are companies which are great companies in the medium term. Obviously, valuations have become pretty expensive across the board if you look at any consumer staple company or pharmaceutical company. But I am willing to make a call that you may not see that kind of derating, even if see a big slowdown in terms of economic reforms momentum, etc., etc. And valuations probably hold up more in anticipation of the kind of medium term growth India affords as far as some of these sectors are concerned. Now, coming specifically to Colgate and two companies where we have increased the weight in turn, Colgate has become remarkably expensive, I must say. I mean, not that it was very cheap when we put in the portfolio. It was trading at about 30 times on March 16 basis. It's now become about 39 times on March 16 basis. So obviously, it's become pretty expensive, but it's a great franchise. I just want to see when is the right time in terms of either time or price to add back to the portfolio. I mean, it's a company which will continue to grow for the next 2 decades in my view. So nothing to worry about in terms of the growth prospects of that company. And Marico falls in a similar category, but maybe it is cheaper to start with. And you could see some earnings surprise coming in over there if you see copra prices correcting, which we expect will eventually happen. I mean, we haven't built that much into our numbers, but copra prices account for almost 16-17% of its total sales. So even if you see a 30% correction in copra prices from peak levels, that could add about 500 basis points to the gross margin straight away, which is a pretty big improvement in EBITDA margin, even if you assume the company reinvests some of that into ANSP, etc. So that's Marico in simple terms. As far as Cipla is concerned, valuation is expensive, but when I look at the opportunity this company has in the respiratory segment going forward, it's a pretty large segment. Market is probably not willing to give a lot of value for that as of now. So this company is getting more valued on the core base business, which is reasonably stable and growing at the same time. And if you see some of the developments as we anticipate on the respiratory side going forward in terms of the opportunities in UK and US panning out, I think the stock could do very well in the next 3 years.
Okay, we just got news in about Nigeria depreciating its currency by 8%, and we are seeing some big negativity in Bharti and in Bajaj. More importantly, in Bajaj Auto, we saw a bit of a downtick. Maybe you want to pull up Bajaj Auto stock as well. That's down 2.5%. Nigeria is one of their biggest export destinations. Views on these two?
Obviously, these are events linked to whatever is happening in Nigeria. There is, the decision of the central bank to raise interest rates over there from 12 to 13%. I guess a lot of emerging markets will face that pressure going forward. And I would say over the next 12 months. So you're already seeing several emerging markets having raised interest rates over this period. Brazil did that, South Africa has done it, now Nigeria is following it. Given primarily the fact that dollar seems to be appreciating quite sharply, inflation is still very high in most of the emerging markets. And some of the countries which are also exporters of oil, they have double trouble, so as to say, in a sense, and obviously your main source of revenue is also coming down. So clearly, Nigeria didn't have much of an option, I would say. Coming to the companies, obviously they will get impacted by all this currency-related changes when it comes to translation into rupee earnings as far as India's numbers are concerned. So I guess the market is taking that negatively.
All right. Well, that's about these two stocks, Bajaj and Bharti. But we have a query that's been posted on our Money Control message board. So I'm going to read that out to you, Sanjeev. Mandar Shroff has written to us from Mumbai, and he wants to know if it's a good time to invest in some of these auto companies. He's picked out Eicher Motors, Motherson Sumi, and Bosch. Whether it's a good time to invest at current levels. I heard you mention a while back that automotive demand has slowed down post the festive season. But what's your view on these three particularly?
Bosch is a great franchise. Valuations are pretty expensive for all the three names, I would say. That is the basic problem that we are grappling with. If I recollect correctly, iShares would be somewhere about 29-30 times on March 17 basis after building a lot of earnings growth. I think Motherson Sumi would be in a similar range, and Bosch also, I suspect. I mean, we don't cover it, so I don't have an idea of the valuation, but I suspect it may be similarly expensively valued. But having said that, at least Bosch is a great franchise. Earning numbers will continue to grow for the next several years, given the kind of monopoly it has on the business. Motherson Sumi, I would be a little bit worried at current levels, in the sense, Euro has depreciated quite sharply, so it will have some impact on the earning numbers once again, as far as the rupee earnings are concerned. The auto business in Europe probably has, bottomed out, so maybe volume recovery is on its way over there. But it's not as if the recovery is going to be pretty strong as far as Europe is concerned. iShares, I think, is just an expensive stock. I mean, the business can grow for the next again several years. They are very nicely positioned in that particular niche segment. 250 to 500 cc kind of bikes, and I think the export opportunity for iShares could also be pretty large over a period of time. So it will grow. I don't think there is any doubt about any of these companies not growing over a period of time. But the only thing is, how much do you want to pay upfront? That I would leave it for the viewer to decide.
Okay, maybe now to wind up, a blank check kind of question. Anything that you can spot in the mid-cap space, or you have spotted where you have valuation comfort?
Not really. Most of the stocks which we had in our portfolio seem to run up quite a lot. We had some consumer staple names last time. We had discussed some of them. I mean, all of them have gone up. But I think, now you just be positioned for the compounding effect. So I suspect the case of re-rating is largely done. When you look at the smaller private banks, maybe you could still see a federal bank which is trading at 1.4 times, can still relate to 1.7, 1.8. So then people have to get comfortable on the growth trajectory as also on the quality of book. So that is more linked, what's happening on the macroeconomic side, interest rates coming down and so on and so forth. Similarly, when I look at the consumer staple names, we had a number of them, and still have, something like a Britannia, Dabur, Marico. These are companies which will give you about 15-16% earnings growth over a period of time. And I can make a call that maybe the valuations will hold up. So you make money more through compounding through these names. I suspect, on a broad basis, the argument for re-rating of India and Indian stocks is broadly over, I would think. Now it's money being made more through earnings growth, as and when that happens.
All right. On that somber note, we'll take your leave. Thanks so much, Sanjeev Prasad, as always, for joining us.